Hey guys, Daniel here and welcome back to another video. Here today, we're going to be taking Coinbase, an established cryptocurrency exchange trading on the public markets, and comparing it to Voyager Digital, an up-and-coming cryptocurrency exchange also trading on the public markets, looking at both of their valuations and seeing which one's the better deal. Lastly, we'll finish it off by looking at some of the remarks that the CEO, Steve Ehrlich, made just yesterday. If you enjoy these Voyager updates, feel free to share it with a fellow Voyager investor, and let's get into it, guys. When we look at Coinbase's valuation here first, we're going to look at Coinbase's, then we'll compare it to Voyager, and then we'll see which one's the better deal. But we got to understand Coinbase's valuation first. The fully diluted share count on Coinbase is 261 million shares, right around there. That's what the number says on their S1 filing, so I'm going to use that number here. The stock price right now is trading at $300 per share. Obviously, I'm filming this in the middle of the trading day, so it could end the day a little bit differently, but either way, we get the gist of it, right around $300 per share. Multiplying the fully diluted share count by the stock price gives us a market cap of $78.4 billion. Now, this is different from what Yahoo Finance says, so it's really important to take a look at the actual company's report to see what the fully diluted share count is. In this case, 261,300,000. Now, we're going to use the company's trailing 12-month revenue, looking at Q2, Q3, Q4, and Q1 of 2021. Here on the side here, I have my math here. I used the company's report to come up with these numbers. Revenue of $186 million in Q2 of 2020, jumping to $315 million to $585 million. And the Q1 that they just had was absolutely phenomenal and just absolutely blew the minds of investors across the world with $1.8 billion in revenue. Adding all of these together gives us revenue of $2.88 billion for the last 4 quarters. So using that number, we can also calculate the net income, which ended up being right around $1 billion in net income for the past 4 quarters. Now, I'm using the past 4 quarters here because of, obviously what we had here in Q1 of 2021, but it's important to note that this quarter on a revenue and net income basis will probably not repeat till at least the next few years, as long as Voyager keeps growing, because of the real sentiment around cryptocurrencies in January, February, and March of this year. Coinbase experienced a surge in demand, surge in deposits, and essentially transactions on the platform, which led to a much higher increase in revenue and net income. Now, this is most likely going to decline pretty significantly in Q2 and Q3 of this year. But, that we can balance that out with the prior 3 quarters and whatnot, which gives us, right around that $3 billion mark for revenue. Now, this gives us a net income margin of 36.5%. Obviously, Coinbase is a very, very profitable company. Now, we can use these two numbers to come up with a proper price to earnings ratio and price to sales ratio for Coinbase. On a price to earnings ratio basis, which is the market cap divided by the net income, we get around a 74 price to earnings ratio for Coinbase. Using a price to sales ratio, we get a 27 price to sales ratio. That's obviously dividing the market cap by the revenue for obviously the last 4 quarters here. Now that we know Coinbase's valuation here, where it trades at, we can use these numbers and compare it to a Voyager. But before we do that, we got to look at Voyager's valuation. Here, in this case, we have Voyager trading at a fully diluted share count of 172 million shares. We multiply this by the current stock price of right around $17.50 on the USD exchange. That gives us a market cap of right around $3 billion. I can make this a little bigger. Now, we have revenue of $360 million. Where do I get this number? Obviously, Voyager has not reported any earnings with $360 million or anything even close to that. But you need to consider that a year ago, Voyager was doing a few $1,000s a month in revenue. Now, they're at a pace of $30 million. At least that is my expectation for the month of March. They had $20 million in revenue for the month of February, and the data they released in the month of March makes me think that the current revenue run rate for the month of March was around 30 million, but the Voyager CEO said that growth has continued into April. So that could honestly be very conservative given, if potentially Voyager has really grown that much in April. So, this is more of a conservative number here, but multiplying $30 million in revenue on a monthly basis by 12 months gives us $360 million in revenue. So that's how I came up with that number. And the CEO has also said that EBITDA margins are at 50%, right in line with Coinbase. They actually said that. So given that, I'm estimating a net income margin of 35%, which is actually pretty conservative. I could definitely see that being closer to 40%, depending on how much taxes they end up paying. So given that, we have a current revenue run rate, that's how I want to consider this, of $126 million in net income on a yearly basis. That's important. Revenue run rate, right? We can't really look at the past 12 months for Voyager, as in this case, the past 12 months haven't really been that significant. It's really January, February, March where we've really started to see that growth with Voyager, and we'll see that continued growth throughout the rest of 2021 here. So obviously we use the same kind of ratios here. In this case, Voyager actually gets a 24 price to earnings ratio, obviously dividing the $3 billion market cap by the current revenue run rate of right around $126 million in net income, and then the price to sales ratio, which is obviously the market cap divided by the revenue, is right around 8. Now, let's compare this to Coinbase. I'm going to drag this over here, and we can actually compare this pretty nicely here. Watch. Coinbase here, Voyager here. We'll see that Coinbase trades at a price to earnings ratio of 74. While Voyager trades at a price to earnings ratio of 24, significantly less. If we look at the price to sales ratio of the two, we'll see that Coinbase trades at a price to sales of 27, while Voyager trades at a price to sales of 8. So one thing we know for certain is that Coinbase trades at a significant premium compared to a company like Voyager. Why is this? Potentially because of, again, Coinbase having these numbers actually written out in reports, while Voyager hasn't really released these in official reports yet. That'll be end of May, early June that we get their Q1 filing, which will really start to show Voyager's profitability and revenue. Potentially, Voyager is a smaller company that comes with its risks, and Voyager is listed on the OTC exchange with Coinbase listed on the NASDAQ. So obviously, NASDAQ has more liquidity, more potential investors, and the OTC market is generally considered to be a little more risky and holding smaller cap companies. Eventually, these problems will get fixed for Voyager as they'll uplist sometime in 2022, and they'll really start to report their numbers Q1, Q2 of this year. Now let's take a look at, what if Voyager traded at the same valuation of Coinbase? This is very interesting. Obviously, with a PE ratio of 74, Coinbase trades at a big premium, a 311% premium. So if we add that same philosophy to the stock price, we'll see that a fair value today, if Voyager traded at that same 74 price to earnings ratio, would be $54.41 per share. And right now, Voyager is trading at $17.50 per share. Keep in mind, this does not price in any growth for Voyager. All it does is say, all right, we're going to value Voyager parallel to Coinbase because they have similar business models, and Voyager, potentially has a little more growth, which will outweigh the potential risks of it being a smaller company. Now, will Voyager end up trading at a 74 price to earnings ratio? Probably not. As Coinbase, again, as a much more established company, they'll probably demand a higher price to earnings ratio. But could I see Voyager trading at potentially a 50 price to earnings ratio? Definitely. And given that case, I think Voyager stock, as of right now, is significantly underpricing its current fair value. Now let's take a look at my long-term price targets. I'm not going to go through these as I do have a video going through it completely. But one thing to note, with my long-term price targets, we'll see I use a price to earnings ratio of 40. This is very interesting, guys, as Coinbase trades at a price to earnings ratio of 72-74. So if we apply that same kind of price to earnings ratio here, we'll see the valuation or the potential valuation of Voyager jumps significantly. Now, again, will Voyager trade at a 72 price to earnings ratio? It could, but we don't know that. But one thing is for certain, with my long-term price targets, this gives a lot of leeway for Voyager as a company, as, at this point in time, they don't necessarily have to hit that $5 billion in revenue, as, what if they only hit $3 to $4 billion in revenue, but, the increase in valuation actually makes up for that. There are a lot of variables here with my long-term price targets, and this potential for a higher price to earnings ratio only benefits the company in the long run. I'm going to continue using a 40 price to earnings ratio because of the fact that, just to be conservative. I like to be conservative with my investments, and if Voyager ends up trading at a 72 PE ratio, so be it. That will be phenomenal. Next thing that I want to talk about is the interview that CEO of Voyager Digital, Steve Ehrlich, had just yesterday on Coindesk. I want to go through everything that he said and all the important stuff. First, he talked about the growth that the Voyager platform has been experiencing over the past couple of months. He said it's been explosive and that it's continued into April. This is big, guys. When we just looked at our numbers here for Voyager, we used my estimates for the month of March. Obviously, we know that Voyager is growing at a rapid pace. So, given what he just said, it would not surprise me to see Voyager potentially at a 35 plus revenue run rate, or $35 plus million revenue run rate on a monthly basis going forwards. We'll see what it actually is when Voyager ends up reporting earnings late May, early June. Next, he talked about the withdrawal issues. Obviously, we know Voyager has been experiencing some delays with a few of their features like withdrawals and deposits. He reiterated his stance that the priority for Voyager is the safety and security of customer assets and that they are taking extra steps to ensure all of these, essentially, funds are safe. Like I said previously, a platform delay on Voyager will be forgotten with time. A platform hack will not be. So it's good to see Voyager really prioritizing security. He's saying there's a lot of fraudulent activity out there within all banking systems, and specifically Voyager. So again, that really emphasizes why Voyager is taking those extra steps to ensure security. He also said that you can't just assume all tweets are true. From his understanding, a lot of the tweets that he replies to on Twitter and looks into their problems for are actually just not true, and sometimes are problems that the customers actually had. In certain instances, for example, customers depositing money into the Voyager platform and trying to withdraw it before it actually clears the account. Now, that's not to say customers are not experiencing delays, because they are. But the ones that are a small percentage of the entirety, and that ensures funds are safe for everyone. So he's saying that's a small price to pay for the essentially security of all customer assets out there. Again, if you are experiencing delays, I'm not saying this makes up for what Voyager is experiencing with these delays, but just know your funds are safe and eventually will essentially come into your account. Next, he talked about the outages that Voyager has faced in the past, the most recent one on January 28th of 2021, where the platform shutdown occurred due to 100 new signups, 100 new accounts coming onto the Voyager platform every minute. From Steve Ehrlich's understanding, he has never seen this in the industry before. In his time with E-Trade back in the 1990s and early 2000s, he has never seen this before, and it was primarily due to the fact that, Robinhood experienced essentially trading restrictions, which led a lot of Robinhood customers to go and sign up for the Voyager platform. Now, they experienced that, essentially that shutdown, and their first thought was, how do we fix this? So they immediately raised $150 million in capital. They increased their employee headcount from 25 to over 100, which are now all in service and tech, or a majority are. Now, raising that money, they also have started a 120-day system upgrade process. This was back on January 28th, and this upgrade process should be done in the back half of May, early June. We'll see if it eventually does go through, but once the system upgrade takes place, the capacity of Voyager's platform will significantly increase. Withdrawal deposit times will also decrease as well, which is very, very good. Next, he talked about Europe. Obviously, we see this as a big opportunity for them with international expansion. They're currently working with French regulators to get into Europe, and he said to expect expansion into Europe in the latter part of 2021. He said that obviously Europe has different rules than the United States, which obviously takes a little more time to get into, but once they do that, will open up a big market for them. Next, he talked about the partnership with Lottery.com, which was announced just a few days ago. He says that Voyager now has a huge infrastructure to allow for crypto payments, and that the partnership with Lottery.com was the first foray kind of into this for Voyager. And it was actually Lottery.com that approached Voyager for this essentially payment, Stripe-style payment system with cryptocurrencies, which will be allowed on the Lottery.com platform because of Voyager. Next, they asked him about a crypto crash. How will this affect Voyager as a platform? He said that volatility is very beneficial for all exchanges, including Voyager, and that last Saturday, when cryptocurrencies crashed 15 to 20% due to potential money laundering from financial institutions, that was Voyager's best day in the company's history. So it's really good to see Voyager continue to grow, and it's good to see them benefit from those volatile times. He also added that with customer deposits, it takes time for those deposits to go through. So instead of just, essentially leaving the customers in the dark and having them have to wait for the cryptocurrency to deposit, the company goes out and buys the cryptocurrencies the customer wants while the deposit is processing. So once the deposit processes, they pay for the original price of that cryptocurrency and they own it, which is very, very good, as it allows, customers to buy crypto while their deposits are still processing. Next, he said that, the cryptocurrency industry will take years to change, and that volatility will continue to come as the system, the financial system, goes through a major change from fiat to cryptocurrency. Now, if you found any value in this video, feel free to share it with a Voyager investor. Thank you so much for watching. I really appreciate you being here. See you guys next time.